gentlemen, I think a lot of you thought I was joking when I told you I sold my bed, I moved to an air mattress, I flipped my Yeezy shoes because I wanted to free up some capital to take advantage of these tumultuous recessionary periods where all these idiots sell really good assets at recessionary kind of pricing. I mean, we're talking about discounts, baby, because the whole point of this channel is to fast track my financial independence, to perhaps one day retire early and document it here for you. And I don't think most people have the mental fortitude to handle that because they want to enjoy their luxury items. They want to take up mental space with financing cars and doing tricky little things to think they can get ahead of the market until they get slapped upside the head when things get bad and realize what real work looks like here, folks. Because to me, the only thing that matters is my time and my family. I don't care about anything else, and I'm willing to sell the suit off my back on eBay. If you're willing to buy it, let me know in that comment section below, because we're going to go over today what it took to wipe out this entire market, why it's not as bad as everyone's saying it is, and then we're just going to listen to some other people like Meet Kevin's strategies. But the story I'm hearing time and time again right now, take a listen.
I invested well over 30K in VGX. I'm not going to see that back, right? And so I'm in a position like you guys. I honestly believed in Voyager. I was thinking 100% for myself, so I'm standing on that. I was just wrong.
Now, I love Mike the investor. He just lost $30,000 in Voyager, but he's not the outlier situation because those people are hiding in their caves right now. These are the kids in their parents' basement flipping NFTs, people that just made far too much money, thought everything was going to be easy forever, over-leveraged themselves, and now they're back working at McDonald's and fast food joints to try and get their feet off the ground. And you think I'm joking, but trust me, they're out there. You got to go to Reddit. You got to dig on TikTok. They're not really going to pronounce that because it's embarrassing as hell, and I give anybody credit that has the mental fortitude to actually show their losses. But how bad is it really? I mean, it sounds bad. I mean, take a look. Crypto, the entire crypto market lost $2 trillion in value. It's now below $8 trillion with the total market cap value of all these cryptos, right? Look at the stock market. S&P 500 wiped out $7 trillion from the S&P top 500 companies. Everyone's freaking out, preparing for a recession, doing hiring freezing. And what did it take? A little bit of inflation here, which again, the market really wasn't tanking when inflation started raging during the logistics problems, right? But all of a sudden, interest goes up a little hint. The Federal Reserve, the Canadian Treasury start freaking out a little bit. And all of a sudden, we get a self-fulfilled prophecy where everyone freaks out so bad, it compounds into the market. But meanwhile, all it really took was interest going up 1%. I mean, we're not even back to the 2008 levels. God knows the 1980 level interest rate hikes. I mean, take a look at the Canadian interest rate here for my Canadian fellow brethren out there. I mean, this is not that bad. And what are the unintended consequences that are beneficial to the entire economy outside of wiping out the stupid leveraged kids in their parents' basements? I mean, take a look at the US dollar index here, folks. The US dollar has gained so much strength in this environment because I don't know why no one mentions this, but the fact of the matter is, if you don't know what bonds or GICs are, basically government debt. If you want to loan money to the government, they'll pay you a really healthy interest rate. I'm talking anywhere from 4 to 9% right now, and that leads global economies, people from China, Switzerland, it don't matter. They're flooding their money into US government debt, which means they're buying US dollars. And what does that do? That floods the US dollar up. And during a period where we're seeing commodities crash, which is why I think inflation's peaked, all of a sudden the US dollar now has global purchasing power at an extent that we did not see even in January of 2021. I mean, we're talking about a pretty big little jump up here, 10, 20, 30% even at some of the peaks, maybe not 30, I might be getting a little over exaggerated, but nonetheless, guys, the unintended consequences is actually benefiting you as a US citizen. What does this do for other currencies? Well, the yuan, again, the yuan's crashed, so that's good purchasing power for China. The Canadian dollar also crashing. I mean, there's a lot of advantages that are now coming from this, and you just have to understand that things will not be as bad as the media is jamming down your throat. That is a spring that is winding back, that is going to pop the market back off when we head into the new bull market of value creation. People do not understand the value of the economics when we're talking about AI, when we're talking about genomics, when we're talking about obviously cryptocurrencies and all that stuff. It just takes time for that to come back. If you believe that value creation is going to come, then you better free up your own damn capital and sleep on a futon to freaking buy some of these dips, right? And continue to take advantage of where the value is going to be at. So what are people doing? The diamond handlers, your GMEers of the world here, folks. Diamonds in this game are not for life. Sometimes you cannot get married to your investments because the stock market is pure fugazi. The stock market will never make sense. It is a supply and demand metric that has no real correlation these days to the underlying fundamentals of the business. And I think the prime example of the diamond handler that said he would never go anywhere with his high risk investments has now kind of conservative back. And you know, the only way you'll find that out is if you pay him money, get into his course members. I'm always hypercritical of Meet Kevin, but only because he was so damn cocky in January when he thought he bought the dip and it rallied back and he sold out again and he kind of left all these bag holders behind. But just take a listen.
Done what I think is best. And that was in January, selling everything to get rid of any kind of money-losing company, any high-risk company. I was able to sell everything. And that included my tech, that included my crypto, that included my risk on. Now, I did trade into some crypto after that, and unfortunately had some losses on ADA, but that was a fraction of my previous position. I just want to make that very clear. Again, not perfect when I say I sold all my crypto in January, but I did sell all my crypto in January. I just rebought and then sold again a little after that. But anyway, I'm glad I got rid of all my risk on, and I really haven't exposed myself to a lot of risk on yet. Risk on probably represents maybe 1 to 2% of my portfolio. You can't really see that there, so I'm going to write it over here. Risk on probably represents somewhere around 1 to 2% of my portfolio for risk on.
I just really want to summarize this for you guys. So basically, he's completely levered out of SPACs, risky, small cap, all that crap. He's highly leveraging into the Tesla tech companies and what he defines as security investments, companies that are going to be around, have really good growth rates, and he's really pulled back. But again, he doesn't really offer full transparency unless you're paying him money, something that I've done on this channel from day one. I will always offer full transparency because I can admit when I'm wrong, and I'll show you when I'm wrong and what I'm doing. But I've done exactly what he's done. I am by no means any different than me, Kevin. I just think I'm more transparent about it. But I mean, I sold out of all my risk on assets. I sold out of a lot of my tech, the vast majority of my tech, come February after I got slapped upside the head with Facebook stock. And now I've kind of divvied that up into what I've called security investments, things like VYM, things that I largely knew would not go down because I don't want to be fully in cash. I always want to be mostly in the market. But now that VYM is holding at these security levels and we're starting to see all of these awesome assets like Google, like Apple, well, Apple's kind of rebounding. But again, you kind of get the point, right? Even with crypto, for example, I'm still dipping my toes into crypto here and there and trying to take advantage of the dips. I mean, I'm playing my own game here, folks. So sometimes you have to recognize it. And if you can't come to these conclusions on your own, you're going to get wiped out because by the time Kevin tells you what he's done, it's pretty much too late because you're going to get in the mindset that you got to hold on to these diamonds forever. You can buy the dip, but when it wipes out 90% of your value and you think buying the dip after a 90% drop is going to somehow get you back to where you were, damn, especially when your job comes into contemplation, your family life has issues or anything like that hits you because life is not that simple, you're going to realize how hard it really is to kind of fast track a financial independence and one day retire early. Now, Kevin's retired. I am by no means, and when I say retired, the guy's got millions of dollars. I do not have millions of dollars. Therefore, I think I'm more relatable to you, and you're going to see how I hustle, and I hope that motivation kind of passes off to you guys a little bit. Now, I'm going to be continuing to kind of monitor the markets as we head into earnings season. I'm going to be doing some live streams over at the live stream channel, The Passive Income for Dummies. Link is in the description below if you guys want to kind of watch and see how I kind of react to some of these earnings unfolding, considering how volatile Netflix was, how volatile Snap was. We're going to be paying close attention to Google and Facebook because after the earnings period is when I'm going to be loading the boat and repositioning some of my VYM position. There's going to be a lot going on over the next couple weeks, but I want you guys to have the mental fortitude to realize, first and foremost, it's not as bad as everyone's making it out to be unless you were an idiot. Some of us all end up becoming an idiot. Don't get me wrong. I've been an idiot too. I've lost 50% of my entire stock market value back in the early days. It took me a year and a half to make any money in the market. So if you're one of those people that's only been in the market for the last 2 years, trust me, I've been there, and I'm hoping this is more of a learning lesson than a wipe you out and never come back, because trust me, you can come back way better, way stronger, and the only way you're going to get to the levels that I've achieved, Kevin's achieved, is by having the mental fortitude to realize this is a long game. It's not a short game, and realize that if you're in your 30s, early 20s, which most of you are watching this channel, you've got a lot of runway to become rich, but we're going to do it early and we're going to do it together. So on that note, stay cool, stay awesome, and as always, I look forward to catching you in the next one.